Hello everyone, welcome to this video. In this video, I'd like to talk to you about gold, the precious metal, because of two important reasons. One, gold is very important to investors. Sometimes the price of gold seems to fly off the charts. And this is super interesting. Why does this happen? Because the opposite also happens. Sometimes investors couldn't care any less about gold, and then you see the price of gold tumble. Secondly, gold is very importantly, very tightly related to the global economy. And so the global economy kind of gives us an idea about when we should jump in gold and when we should jump out of it. And so how is this relationship with the global economy and why? And these two important reasons we'll be touching upon in this video. So without any further ado, let's jump into the topic and let's first talk about the properties of gold versus, for example, money. So gold's value is of itself. That's very important. So gold is what it is. It's not like money, like $50, $100. It's not like a sheet of paper on which you can write something and that the value is what you write on it. No, the value of gold is of itself, and this gives a sense of security and a sense of trust towards gold that you don't have in these sheets of paper that we call money on the day of today. Gold cannot be printed. It is how much it is. You can mine it, but we kind of know how much gold is around in the world, and this becomes priced already in the gold price. But money, again, this is not like this. You can print much more money. You can print new money if you wish, and having more of something means that each one of the things become less of value, and this is what we call inflation. Because money is printed, its value tends to decrease over the course of time. We don't have this with gold. Gold tends to store its value even over the course of time because the amount of gold is fixed, and again, its value is of itself. Interesting also, gold is not under any country's control. Gold is just under the ground, and whichever country pulls it out of the ground has gold, and gold is quite dispersed across a lot of nations. With money, this is very different. Money is tied to a central bank because the central bank can print it and can have all sorts of policy measures to regulate that money. And of course, the central bank is tied to a country. And so if a country messes up, politically speaking, strategically speaking, in terms of trade or whatever, this is directly going to spill over to the currency in terms of a value decrease. This is not the case with gold. Gold has its value compared to these currencies, and if these currencies decrease in value, then gold is going to appreciate in value because, again, the value is often in relation to each other. And these three things are very important to keep in mind. So gold's value is of itself, not because of the subjective meaning that we give to whatever is written on a sheet of paper. Gold is not under the control of a country, and so any country messing up does not harm gold. And so gold supply, thirdly, is kind of fixed over the course of time, and so inflation does not harm gold's value over the course of time. So these are benefits of gold. But then, of course, why are we not just doing everything with gold, right? That's the question. And the problem here is liquidity. So, gold you cannot buy stocks with. Gold you cannot go to the supermarket and buy stuff with. Gold you at the same time cannot put on the bank and get interest over it. So gold we call something that has no yield. With money that's different, and this makes money interesting and attractive. The transferability of it and the use of it makes that in moments where interest rates are high or where opportunities of investment are high, people tend to favor money over gold. But again, in the opposite situation, when interest rates are low, when investment opportunities are risky, and now think about the crisis period, well, then people tend to choose security over transferability or over yields, and that is when gold tends to shine. So now let's think about the day of today, okay? So gold is inversely related to the economy. So what does this mean? So when the economy goes down in terms of growth, in terms of all sorts of metrics, people tend to flock to security because they don't want to lose their money, or at least they want to hold the value, and perhaps gold value might increase compared to these other currencies, right? So people tend to go to gold in these types of situations. And if we think about the day in which we are today, first we had the trade war, we had the protectionism, particularly coming from the US, and followed up by China and the EU. So this already caused the global economy to slow down. And then after this COVID-19 came, people couldn't freely move anymore. People were, having a sense of insecurity, so they bought less, and this led companies to invest less and to produce less. And of course, trade also decreased and so on. So first of all, the issues with trade, then COVID-19 already led to global economy to slow down. And this led to the economic crisis, global economic crisis that we are in. And of course, this led to an increase in demand to gold. And that is actually the run to gold that we see today. The gold price has increased by about 50% over the past 2 years. And this run to security, you should even pull this further, because what is happening in such a situation? Economies try to increase their progress, right? They try to grow faster, they try to accelerate, and to do this, they're decreasing the interest rates. Why? Because if we decrease the interest rates, companies can cheaper, get loans, people can get consumer loans, and all of this should accelerate the economy and prevent a crisis that could be even deeper without a decrease in interest rates. But don't forget what I said. When yields are low, so when interest rates are low, and so when it is not attractive to put your money in bonds or on the bank, people tend to go to gold because it gives more security, and it already had no yield. And so why not choose something that tends to be more of a store of value? And that's what we're seeing kind of in the day of today. And so what is expectable here for the future? So two important things are important here. One, is there going to be a second wave of the coronavirus? If yes, the gold prices will fly. This is very simple. People will again go to security because of the potential of, again, lockdowns. And with this, a decrease in economic activity, further decrease in interest rates, and gold becoming more interesting as something that, okay, it has no yield, but at least it tries to, has a value of itself, and it will store its value. Secondly, is the global economy going to recover? If it is going to recover fastly, or at some point when it is going to recover, you will see that gold prices are going to plummet, because now people have been overbuying it because of a sense of insecurity and fear. And of course, this is going to flip again, and you might see massive tumbling in gold prices when the global economy is again going to recover. I hope you enjoyed the video. If so, don't forget to hit the like and the subscribe buttons. I wish you all the best in the world. Hopefully, we'll see each other again in future videos. Best wishes.